Fixed rate borrowers are not changing spending habits. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee because I thought we'd have a look at this article. This is one from mortgagebusiness.com.au discussing, well, fixed rate borrowers and their spending habits. So, fixed rate borrowers are unlikely to be changing spending behavior, at least according to the RBA. Now, I'm a fixed rate borrower. I did not believe that interest rates would go any lower when they were at 0.1%. I had a construction project I wanted to do on my house, and, well, by locking in, I wouldn't be... my wife was honestly worried that I would just say, yeah, we'll just live in the house, this is a bit run down, and pay off the whole mortgage and just keep throwing all the money off it. So this was, I guess, her way of stopping me to do that. So we locked in until 2024 because, well, we knew rates were not going to go any lower. The Reserve Bank governor has said that. Even though there was media reporting that they were looking at potentially negative rates, we knew it wasn't going to happen. And, well, if they're not going to go up until 2024, why wouldn't you lock in? And I'm not alone. A lot of people didn't trust the Reserve Bank, either that rates were going to go up or they wanted to lock in a cheap bargain. Now, there are two types of people that did it. There are those that were FOMOing in to the, or bought into the Mania, there was a dip in property prices, so they all jumped in. Now the market overheated, it went really crazy, prices went up an insane amount, particularly here in Brisbane. Just the last few years, the average rise of house prices is crazy. And even if we lose 10 or 20% of the current value, it's still going to be well ahead of where it was just a few years ago. Now, here's the thing. If, you bought in recently, you had a fixed rate so you could actually afford the house, and now rates are going up and you're worried that your variable rate that you jump onto is going to be a lot higher than you anticipated, you're going to make spending habit changes. But if you're like me, who bought a decade ago, who has a mortgage that is reasonable and locked in just to take advantage of the cheap money, I can understand why people aren't going to change their spending habits. I've still got another 2 years. I'm not too worried about the higher rate that we're going to hit when we get off it, because this is an insanely low rate right now. I'm on 1.99, a neighbor's at 1.92. I know viewers have told me they got 1.79. These are bullshit rates. And we know that, okay? You know that. Even if you secretly think, yeah, you deserve that low rate because of your brilliant strategy of buying at the right time and just happening to lock it in, it's bullshit. So, looking at this article, I thought I'd ask the question to the viewers. Before we go through that, if you've changed your spending habits. And we got quite a funny result here. We'll bring this one up. So this is a poll I did yesterday. Have you changed your spending habits if you've got a fixed rate mortgage? And we've got 491, and literally 50% said yes and 50% said no. Right down the middle. So let's look at what some of the comments are. We'll go to newest first. What's a fixed rate mortgage? That's literally a fixed rate mortgage when you fix the rate on your mortgage. I'm assuming SG doesn't have a mortgage. So, Nerden is saying, the city we live in has heightened the expenses for housing with 50% in 3 years' time, and they say they will go another 30% higher. So from 2019 to 2026, water bills for owning a home will go from £800 to, £1,800 to £1,900. Pounds, that's super money. Then the electricity has gone from a monthly bill of £400. Oh boy. I try to change our currency into pounds. But this is an Australian channel, though. But anyway, we've got viewers all over the world. Not too many in the UK. Well, actually, yeah, it's probably up there. To now £800 to £1,000 a month. So you get government support, £1,000 a month. That's £12,000 a year. Well, what's the, what is the average income in the UK? What is that? £32,000. This can't be right, can it? You're looking at a third of your income just on your power bill in the UK for the average person. This obviously isn't the average person for Naden. I hope not. I bloody well hope not. Mortgage rate has doubled. The mortgage salary, extreme difference between jobs. The lucky ones are those employed by the government or work in industry that takes missions from the government. A couple where both are employed in government earn £100,000 at least. Many on benefits or low-income work. Much of the salary try to live on $40,000 for a couple. A single on low income is £20,000. With the high cost of living, it's not possible. Salvation Army has long lines. So yes, we have changed our spending habits. We don't do anything. We don't buy anything else than food. See, thank you for that comment. This is just showing you the class difference, guys. And it's coming to Australia. We're seeing that manifest here in Australia. Australia's just becoming more like Europe. I save 100% of my wage and use it to pay down my investment property. I live off my passive income. Even though rates have tripled, the passive income is still there, has gone down a bit, but still going okay. So look at the two stories here. Look at Jack and look at Nerd and what he's saying. Obviously not him, maybe other people in that situation. So, I mean, this is the strategy you've got to teach the young, okay? You've got to tell them you need to build up a passive income stream that you can live off, whatever it is. I would persuade against dodgy crypto bullshit. I'd look at some simple investments. And the aim of it is not to trade it, but just to get income from it. So you can always have that trickling in when you need it if times get tough. Bitcoin and only Bitcoin, #1 commodity on the planet. Let me know if there is a better one. There's a shitload of better ones. The volatility in Bitcoin, I mean, let's check it out. It's just crazy, guys. Okay, it's not a storage of wealth. There you go. Now it's at 28,000. It was down at, 18,000? Now back up again. It's just nuts. Look at Ethereum jumping all around. And the risk with Bitcoin is it's tether fueled. It is tether fueled. So if that falls down, come on. So if you want a better investment, buy Sydney property probably. Or Australian housing. Look at all the dodgy crypto banks where you earn interest on it. How many of them have fallen over? So no, I'm not a crypto bro, guys. I played with it in 2017. I saw all the promises that were made about all these projects materialize into absolutely nothing. And all the new revolutionary crypto things, it's just a bloody knockoff of what's already there. A worse version of it. Instead of getting a free service, you have to buy some stupid crypto token to watch videos or something. It's so stupid. Rent is enough to make me spend the bare minimum consistently. So yeah, rent is doing it pretty tough right now. It's just, we're in a rental crisis. Laugh when I saw my home loan hit 6.79% interest yesterday. My offset account outweighs the loan, but this rise gives me hope to buy an investment house shortly. There you go. I don't have a mortgage, but I'm trying still to reduce spending. I only buy what I need. Still driving a shitbox which runs. One of my relatives, approximately 2.4 million debt. What? Oh. Shit. Here's the thing, guys. I honestly would argue that the best way to be happy in life, it's not piles of money. It's not a super successful career. It's control of your own time. And maybe the money can lead to that. Maybe a good career can lead to that. But that's what I'd argue. It's control of your own time. If every day you wake up and it's like a weekend. If you control your own schedule. That's just my take. My 40 years of life. That's the point I've come to. Let me know what your take on that is. So, borrowing so much money, to show off to the neighbors, to have an extra nice house. Is the stress worth it? Your hair will fall out. I don't have a mortgage. Fixed on a good rate till 2026. Getting ahead while I can just in case. For Ben. Congratulations, Ben. 2026. Good work. Never fixed mine. I'm a perennial in renovator. So while I always have the cash to pay for works, I choose to reserve the option to top up if I need money fast to finish. Okay, cost blowout. The opportunity can be limited with a fixed rate, pending advice from a qualified professionals, of course. Okay, so they're using I'm assuming the redraw facility on their loan as just a pool of money as they need it. Which, I mean, if you plan for it all and you manage it, I mean, fine. That's up to you. Dave Ramsey would hate you, but you just got to be sensible with these things. Pity we didn't get 30-year fixed rates mortgages here. Yeah, but look at what happened with the GFC in the States. Don't need to save for a rainy day. Keep splashing that money around. Still ages away from a mortgage cliff, guys. Stay calm and keep spending from Hongster. They still haven't beat inflation. Well, actually, what was it? A viewer was telling me something. A viewer who I happen to follow on Twitter was telling me about like sound equipment. They've dropped 60%, the new ones, not the second-hand ones. Shipping prices are returning to normal. You're going to start seeing that manifest. So here we have it, guys. Half of you lot, we're all not making any changes. So let's check out this article now to see what they have to say here. Because if the fixed-rate borrowers, we're not going to change any of our spending habits, what signals will that send to the RBA about their impact that they're having? You know, because they've got to beat us into submission to fight inflation. The surge in new fixed-rate loans written during the pandemic may cause the Reserve Bank to lift rates more aggressively due to a significant lag in the impact of monetary policy. Now, that's an interesting take because none of us are being affected by the rate rise that have got a fixed-rate mortgage. My repayments haven't gone up. The place I'm renting now is more expensive than my mortgage, and it's cheap. I mean, where could I cut my spending? Where could I cut? I bought a computer game, but that was birthday money. That was like $30 on a sale. I'm probably I'm probably a bad measure, to be honest, guys. Speaking at the Kanga News DCM Summit on Monday, the 20th of March, RBA Assistant Governor Christopher Kent explained that a high number of fixed-rate home loans have lengthened the time it currently takes for monetary policy to affect spending via its effect on the cash flows of borrowers. Unlike variable rate borrowers, whose required mortgage repayments have risen alongside increases in the cash rate, fixed-rate borrowers face a large and delayed jump in their mortgage payments, depending on the terms of their fixed-rate loan, Mr. Kent said. And here's my point. For someone who's had a mortgage for years and is used to paying higher rates, the jump back up is going to be, I would argue, it's still going to be annoying, but it's going to be more of a return to what they're used to than someone who just got in, barely got a home loan because they worked the system, they got the home grant, they took their super out, they sold a kidney, they did whatever they could, and then just got in at the 1.99 or 1.5%, whatever mortgage they could. They're the ones that are going to hurt. But we don't know how many of those are. Hang on, I'll bring up let me load up my PowerPoint and we can look at that. But anyway, we'll keep going here. Fixed rate loans peaked slightly above 35% of all housing credit in early 2022, compared with a pre-pandemic average of closer to 20%. While fixed rate loans have been rolling off since then and borrowers have generally switched onto variable loans, this adjustment still has some way to play out. Now, let me just bring this up here. What I want to look at, guys, is, well, a few arguments I make as to why we're not going to see a calamitous crash in housing as people are hoping for, but also, there we go, also a few points I want to raise. I call it the FOMO impact, guys. We'll bring that up here. The FOMO, the fear of missing out. How many people bought during this previous period when we saw just FOMO, I would say the mania, the housing mania that happened here in Australia because of the lockdowns. There's the total number of dwellings. You had 600,000 dwelling sales in 2021. And, well, of the government loans, the 10,000, that's only 2% of that. So I'd argue those on the government loans, the 5 and the 2% handouts or guaranteed, they're the ones that are going to be in the most trouble. They're the ones that we're seeing in the ABC articles. That's still a tiny portion of just the sales. Okay? So you've got all of these people here, all these other dwellings, that hopefully should be fine, but it's going to be the ones that have bought recently that are really going to be hit by these rate changes. So don't get me wrong, that's still a significant number of people, and it's going to suck if you're in that cohort, and it may certainly impact certain areas, but it's not going to be as calamitous as people are hoping, that there'll be a huge correction and crash in property, and you'll finally be able to buy in. I don't think people are going to be that lucky. Because what are the arguments I make here? We've got fewer bad loans, guys. The non-performing loans are actually lower than they were recently. It's not going as bad. You've got migration returning, Labor's opening the floodgates. People want to come to Australia as much as some people like to bitch and moan. Australia's a pretty awesome country to live. There's a lot worse options. You've got the construction apocalypse, which is going to just damage supply of builders. It's interesting. The overall construction sector is still pretty solid, but that's the home spec builders are getting hit. You've got government support for the housing sector, everything juicing it up. Super withdrawals, negative gearing, government loan guarantees, now shared equity, guys. You've got the zombie companies that were kept alive. You've got, well, the Ninbin crowd. And you've got 50% of Australians living here, guys, in 3 cities. You've also got legislation changes, National Construction Code changes, energy performance requirements, accessibility requirements. They all sound good, fantastic. Oh, yeah, it's making housing better. It's also making housing more expensive. And I would argue it's not necessary. I know so many of you think air conditioning is like a necessity. Humanity survived without air conditioning. Okay, you can survive without it. It's annoying. It's hot. I honestly wish sometimes, I don't have air conditioning here, I could get an AI filter to put a fake shirt on me when I'm recording my videos, when it's too bloody hot in my little room and all my computers, but it's not the end of the world. You've got APRA intervention. You know, you've got the buffers they've put in place that's screwing over people trying to refinance. What's stopping they won't change it? And then family support. Majority of people, viewers of the channel, said they'll support family as a gift or a loan. They've got your back. So you've got to keep all of these things in frame when you're reading the media and when we're looking at all this stuff. So let's keep going through here. So the unusual high share of fixed rate loans when the RBA started to tighten monetary policy has added an extra delay to the pass-through to outstanding mortgage rates. Since last May, the average outstanding mortgage rate across all loans increased by around 110 basis points, less than the cash rate despite 350 basis points of hikes. See, here's the thing. Even if people could afford these increases in interest rates, they're probably getting more from their other money, it's still going to make a psychological impact. When, you know, your mortgage bill suddenly is 50% higher than it was, you're going to think, oh shit, you know, can we afford that? Even if you can. That's what a lot of this is. Economics, finance, a lot of it is psychology. And, you know, that's like the Fed or the Reserve Bank saying something can have more of an impact than actually doing it. More than half of this difference owes to the effect of fixed-rate mortgages that haven't yet rolled onto higher rates. Also, the average outstanding rate for variable-rate mortgages has risen by around 40 basis points less than the cash rate as a result of competition among lenders for good-quality borrowers. It could be argued that the Reserve Bank may not need to lift rates as aggressively if fixed-rate loans were closer to their 20% average rather than 35%, as the transmission of high rates would have impacted a greater number of Australians. However, how fixed-rate borrowers will be impacted remains uncertain, Mr. Kent said. One issue is the extent to which fixed-rate borrowers make adjustments in anticipation of rolling over to a higher-rate mortgage for better smoothing their spending. And we see here, 50% of you have made spending changes, and 50% haven't. If all fixed-rate borrowers did this to a significant degree, it would mean that the timing of the cash flow channel would be largely invariant to the share of fixed-rate borrowers. But that seems unlikely. I suspect many fixed-rate borrowers do not adjust their spending in advance, but rather wait until they roll onto the higher rate. Even those that are more forward-looking are likely to make moderate adjustments at first, with further adjustments required at the time of the switch. Hence, despite the potential for some forward-looking behavior, it is plausible that the high share of fixed-rate loans has contributed to a longer lag for the cash flow channel. Mr. Kent's comments are at odds with those made by RBA Governor Philip Lowe, who told a Senate committee last month that he believed most borrowers on fixed rates were already adjusting their spending. I mean, it's all smoke and mirrors, isn't it? They got no idea. They're just guessing. They'll probably do a survey of a few people, and it'll depend on who they are. On my channel, and I'm assuming most of the people fed by the algorithm, my poll question of viewers of the channel, we've got 80% male, 90% Australian viewers. Most of you 40 up. So there you go. What does that tell you? It'd probably be a different result if it went out on Facebook. You had more women doing it, or Pinterest, or Instagram. That'd be interesting, but I don't really have an audience. I can't be bothered with those platforms. The bank tells us that people with fixed rate loans, most of them, have been pretty cautious, Mr. Lowe told the committee at the time. They knew interest rates weren't going to stay low forever. Yes, but does that mean, well, you know what it could be? All of us fixed rate mortgage people are just cheap bastards already, and we've got no spending to adjust. Could that be it? Could that be it? I don't know. Anyway, guys, thank you all for watching. Like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one. I mean, the poor RBA, their impacts aren't going to be felt because we've all fixed our mortgages and are still spending, you know, on food and water and petrol. Anyway, thanks for watching. Take care. Check out my other channels, HeiseBim and Heise Does. And if you're a fan and want to support us a little bit extra, you can financially on YouTube or Patreon. You can use our referral links, buy our pocket squares, or call us if you need an architect. Take care. Have a great day. I'll see you all in the next episode of HeiseSays. And now I'm going to go and concrete a foundation. Awesome, awesome Friday project. I'll see you later, guys.